everyone, and welcome to the European crossover webinar. We're into our first inaugural week, and today's Thursday. We've got our data that's coming across from the European session into the U.S. session. We'll get into that. Let me just move this out of the way. Okay, we did have German factory orders, which did take a hit. Probably has the euro a little bit on the weaker side. Dollar ended up paring back from those levels yesterday, although it's holding up. The real big mover today right now is going to be gold. We came into this key area here, this 1040. We'll just make a quick little blip here. Looking across here on the profile chart, you can see it's a big key area right there. Right there, just above, right there, just at 1210. Good key area. The market kind of paused a little bit. Now we're kind of reasserting ourselves right now with the gold, but it looks like one of the things about gold is that it's been kind of trying to think of the right word, but not going along with what the dollar was doing. When gold was breaking down this last time, we got below 12. The dollar made a new high, and gold had the opportunity to even push below. We talked about that, maybe even down to 1191. And it really wasn't reacted to the way the dollar was moving. So we've seen that basically go and move. I wouldn't say not inversely, but we were it wasn't going along with the type of moves that we were seeing. The dollar kind of like ignoring it. It was losing the dollar pull was losing its effect on gold. And so now we've seen gold start to work higher, and potentially we could see gold push a lot higher. One of the things that we looked at, this is about a week and a half ago, we made that first push. We had some good resistance there at 1219, but they looked like there was opportunity for gold to even push beyond there, maybe even up to about 1226, 1228. I think we're starting to see that now. The dollar's starting to get a little bit of a lingering or a little bit of fatigue up in here, so we'll see how this goes and plays out. But the gold is the big mover today, coming into this key area. You see right here at this 1040, potentially up here to 1290. We'll see here how much further they can push, but a little bit of a pause area here coming in here, but it's really in the early part of its moves. If you were to look at the dollar chart next to this, you can see that when the dollar continued to strengthen, gold was still holding its lows down here. We weren't really breaking lower where you thought the dollar could have pushed, let's say much lower, but could have got into the upper 80s, and it held up very well. So once again, as I mentioned, we're kind of getting that effect now with gold, where it's been so oversold for so long that probably do a pretty decent little bounce. You can see here, very oversold, but it's held up well. So while the dollar turned around, and remember the dollar index made it up there, we were looking at that area 95.71. It actually, day before yesterday, got up to 95.75. Gold held its own. Gold didn't even forget down here, which was already a huge move down here. They didn't even come down here into the 91, let's say maybe even a stretch down here to 88. It's held its own, and now we're starting to see a little bit of pushback up in here in gold. So certainly it has the opportunity to go much higher here at this point. But anyway, getting back on here, we had the German factory orders come in, which came in, certainly weaker. Probably had its own effect a little bit here on the euro. Now, coming into the US session, we are going to have our weekly jobless claims numbers and also productivity. Now, we do have factory orders here in the US. We have final PMI figure. But we have factory orders coming up, and ISM non-manufacturing comes in at 10 a.m. Eastern. So that's the data that we have. We'll go and take a look at some news that came in overnight, just real quickly, just to give us a little bit of a flavor. And we'll quickly go through that, not wasting too much time. Dollar steady on U.S. tariff fears and Brexit hopes boost the pound. The dollar held steady on Thursday on growing concerns that President Trump would impose further tariffs on those Chinese imports we've been referring to. Traders said the greenbacks gains on Thursday, however, were muted It traded broadly flat, 95.11. Traders said because of gains made by sterling and euro, and Bloomberg report on Wednesday that Germany would accept a less detailed agreement on Britain's future ties with the EU to get a Brexit deal done. Well, then Germany came out and basically did an about-face on that, saying that they're solid with the Eurozone. So we'll see how that plays out. We saw a quick dip on the cable when that happened. The dollar continues to face residual pressure from the buoyant pound, and the latest speculation over Brexit, how long this lift could last, remains to be seen, prompting buybacks of other European currencies. And we're going to quickly just get on to, here's gold, obviously looming, up but looming U.S. tariffs on China. Same thing we talked about. I don't want to spend too much time on news. Once we get things balanced out, over the next few days, we'll kind of get a good feel on how we can spread out our time, but still get in good analysis. And moving on to sterling. Sterling nudges up, but still off the previous highs on the Brexit and trade war fears. Since Brexit negotiations are front and center for markets, and despite yesterday's headlines, the near-term uncertainty is going to persist, said Valentin Marinov. Bloomberg report on Wednesday the German and British governments had abandoned key Brexit demands, potentially easing the path for a divorce deal, but subsequent news that German Chancellor Angela Merkel's government is preparing for all Brexit scenarios, including a no deal after his cabinet approved a draft law on a transition phase for Britain after it leaves the European Union next year, prompted investors to take some profits. British currency remains one of the most shorted among major currencies, along with the yen and the Swedish crown. And let's go and move these out of the way. And we'll go and start in here with the euro. Let's go and take a look here with the daily. Certainly, we were able to close above that 1605. There's that 1605 area that we're talking about. We were able to get that closer. Certainly, things are starting to turn around a bit here for the euro. It certainly looks like we could move higher here. Now, we're looking here on the daily here for the euro. Let's take a look here. Now we're looking here for the resistance for today. I mean, I think things are starting to turn around here with the euro. One of the things we looked at on the way down, we had looked at previously that 1530, I think it was 1532, we missed it by 2 pips, and yesterday we had this 1556. I think we had already started to come off of that, and the euro started to work hard. Now, we made it overnight in the Asian session up to the 61% of this area here. This here at 1656, and we've eased back. But that being said, I think things are starting to turn around a little bit here in the euro, and we're starting to see same thing that we were talking about in reference to we're talking about gold when we're saying that we're starting to lose its effect, or the effect that it was being impacted from the dollar. I noticed that about, oh God, I guess it was late last week. It wasn't falling the way you had seen gold fall before, when it was being tugged by the nose ring by the gold market. I think you're starting to see that a little bit with the euro. I think it's holding up. Actually, it's holding up fairly well, and we said that yesterday compared to where it could be. And I think things may start to go on and turn around a little bit with the euro. I think that you're going to start to see people pick this up on the dips. Now, I think things are starting to turn around here for the euro, and we'll go and take a look here. Now, when we're looking as far as resistance today, I think the shift or the momentum's changed somewhat with the euro. When we look at where resistance is, I think that this is going to work as a triggering, which is going to be the 1672. That's going to be the key level. Whether we could jump up to up there and tag some stops just above there, but I think for today the key resistance is going to be this 1673. I think that that's going to be the key level. We do have this as a key level just before that here. You see this coming across, good even line coming across right here. That's 1664. Can we pop above that? We can. I think to me it looks like this is almost going to work almost like a little bit of a trigger. 1673 is where we want to go and put the key resistance here on this. 1673. The reason I think that that's important here is if we start to fade here, I think you could see some people that may be long, not even take a little bit more off the table and make this market prove itself. It's at a point right now that if it got beyond 1673 with some momentum, we're probably going to continue to move even higher. And I would put this in line, and what I'm trying to get at, I'll give you an example, is right here with the dollar index. We're jumping around a little bit, but for some context, I think that if the dollar loses its 95, I think it's going to be with a little bit of sustainability. I think it'll be a quick move to 94. So my thinking is, once again, getting back to the euro, if we're able to, I think this is going to be a good little trigger here, that 1673, and if we're able to sustain and move beyond that, I think we could start really advancing here in the euro, and I think that would be a lot more to do with the dollar starting to pare back. As far as, so let's go move this here. And as far as support for the euro, I'm going to give it a little bit of room. I think that's going to come in. Just one moment. Right here, 1580. Right there's going to be 1580. We're going to look for that for support. 1580. Still things being held relatively tight, but if we're gonna hold here, we're gonna support that euro. That's where you're going to see that demand here. So, now let's go and take a look here with the cable. We had that initial run up on Germany saying they were going to, lighten things up, if you want to put it for less, better choice of words, but they were going to lighten things up with Britain on this whole deal. And then all of a sudden, they basically did an about face and said, well, we're sticking with the strength of the Eurozone. We're going to stick with that plan. And we saw the cable come completely right off. This one is tricky, but if you're just going with simply just the technicals, and I think right now that's probably just the way to go. We're just going to go right here and keep it here at 2963, which isn't even that far away, but I think that would work as a trigger. So it's going to be 2963 on the upside. I apologize. Yeah, 2963. We already mentioned not this whole week. I think is a little bit tricky to go and trade because once again, I remember Pipsar used to say is that the first week back from Labor Day, you got a lot of meetings, people trying to figure out, hey, where are we at? What do we want to do? What's the strategy? And then you start to see these markets kind of develop going in, from next week. But I like to see them, they start to go in, let's say today, and that's what I'm thinking is important with the dollar is and whether the dollar does go in and start to go in and slip back. And we'll get to the dollar index, but once again, I'm going to go with the 2963, and on the support, we're going to go all the way down here to 2847 if they want to test things here. Just a moment. They want to pressure the pound, and this would be a good area here. I think this area right here, 2870, but I think if they hit some stops, they'll take it down, and this was the old 50% to right here. So we're going to be 2847 on the support. case it's a little bit vulnerable. And let's go move into the Aussie. And like I said, over the time of this next week, with the hour that we have, we're going to go and try and balance things out, whether it's news or analysis, or one of the markets that I know that we won't be covering on a daily basis anymore due to time constraints is going to be crude oil. We'll keep it here, but once again, we're trying to get as much analysis in. There'll be certain pairs that may be moving for different reasons. If there's a big, there's a central bank decision, or we have to place more time on that. So we'll decide on how we want to go in and cover this and as much time. We'd like to make sure that the analysis is thorough, but time constraints may limit us. So let's go on and move into the Aussie, though. So a little bit of a pickup in the Aussie, but nothing of any real measure if you look at it. We're still holding here at the 71.50. I think we had that as our support, 71.50. We had 72.23 as our resistance. And really nothing's changed. And I think this area, and that's where we're coming up with the 72.23. The dollar, if the dollar does slip, and I think the dollar is a bit vulnerable that we could, I think we can get to 72.23. That'll be probably like an area of a trigger. So I'd actually like to move the resistance here up to 72. We're going to actually give it 72.57. If the dollar starts to break, I think that's where they would go to before you'd actually see a pause. I think at 23 we could get there and hit some more stops and make it up there. We're actually going to give it a little bit more room. It's actually going to be here. If the dollar does break, if the dollar starts to break, that's what we're going to go to 72. We'll call it 72.67. 72.67. So we're going to give it some more room because the Aussies tried to hold these lows. Let's go and take a look at the Kiwi. Same thing here, holding the at 65.25. Same thing if the dollar does start to go in, pare back a little bit, and I think that's what we're looking at. Where would the market go to or start to initially target before getting a bit pushback? We're actually going to move this to right here in this level. Actually, right there. You see that coming across? It's going to be 66.81. If the dollar does start to pare back, whether it's going to be later today, tomorrow, first part of next week, I think that this is where they can quickly move up to before they find a bit of a pushback. It's going to be 66.81. So give it a little bit more room because we're starting to hold a little bit down here. Nothing of any real great magnitude, but we are starting to diverge a bit. So we'll go 66.81. And we'll move into the dollar CAD. I'm going to take a look at this on a daily. So we know that 32.06 is pretty big. I think we'd actually, because of the Bank of Canada rate decision, we could potentially happen. I think we gave it some extra room yesterday. We put it all the way up here to 32.44. Well, they're still hanging around here, and obviously a lot of things going on with this whole NAFTA situation. So I think that we still have to go in and give it that extra room, depending on how the news is. And we're hanging up here, even though the dollar may be given a bit fatigued, we're still hanging around here. So we're actually going to give it a little bit of room here because it's holding up so well. I will say that the resistance would be right there on the technicals, 32.54. And we're just going up straight technicals here. Key resistance, so let's move this here. Support, well, we're going to stay with this 30.27. You see it right there. And we'll now take a look at it on a 2-hour. Well, here's that same 32.54. That could we even see some 2-hour resistance that can come up here at 75, if you see that right here. But we'll stick with the 32.54. We know that's going to be a key daily level. Support here on the 2-hour goes back to the same area. The only thing is right here. Excuse me, and I think we had that right there at 30.87. But we'll double check. We actually gave it some extra room here, 31.15. So we're going to stay with that 30.87. If we see or if the perception of a deal or no deal is that it's actually a stronger hand for Canada, we're actually going to give it some room. And that might be because actually we don't even look at 2 hours, but we had the 4-hour to give us some more extra room. Convert this back. So the whole idea is, like, my thinking is, if they start to roll over here, a little bit of a fatigue, maybe getting, I don't use RSI, but in case you may start to get where the market's starting to get a little bit tired. Maybe it needs a little bit of a pullback. Down here to this 30.87, right where they got above the trend line, makes a lot of sense. So that's would be our support here, is 30.87 on the dollar CAD, if we get that correction. And we've talked about that as we broke higher, things have started to turn positive, and this mark would be, we would look for to be purchased on the dips. Let's go on and move into the dollar Swiss. We didn't make it up quite to that. I mean, came close to that, 97.75. But as I said, this market has kind of been doing its own thing for some time. Not a good leader of the dollar as it used to be, or leader of the dollar for its direction. Let's go on and take a look here. As far as support, we're just going to go with just above. Whole thinking it's already been a bit of a weaker sister when you look in comparison to what the dollar's been doing. We're actually going to move this lower if we do hit those stops, and that's going to be 96.23 right there. 96.23. Actually, we had that for the daily, so move this over. And on the upside seems rather limited at this point. The upside is going to be right here at this 97.47. Actually put that just a little bit higher. We're actually going to have to scale this area to start to turn things around, or actually stop the bleeding, what we like to call it. It's going to be 97.51. 97.51. And moving on to the dollar yen, one of the things that we had talked about was this 11.36 and how it was key, and we've kind of vacillated on either side just when it looks like about to go bullish. This has left people with a lot of people scratching their heads. Whether or not, honestly, I don't even see what the push is here for the dollar yen to even be at these levels, other than when the dollar is strengthening. But when I look at the issues that they're having with the JGBs, boy, I tell you what, this seems like a recipe to go lower, but it hasn't. And so we're just looking at the straight up technicals. We'd actually went with 12.11 yesterday. Now we know that 11.66 is that bias pivot, but if it was going to push higher, and we were certainly working hard yesterday in the dollar index, it was all about 12.11. We're going to go and keep the 12.11 if we get that pop. But right now, this 11.66 continues to remain the key pivot here for the dollar yen. You can see this coming right across. We've made a few stabs above it, but we have not been able to garner any sustainability, above 11.66. And certainly if we're below it, certainly would look to go and push lower. If the dollar does give in or starts to lose some of its strength, and I think with the dollar index, we're just kind of hanging around here until we can get past a couple of these headlines. And I'm afraid is that once we get past one or two headlines, we could possibly see some of this bid come out of the dollar. But we'll talk about that shortly. As far as the downside, I think that if we do go in and start to move lower, it's going to be here, this 977 right here. That's going to be the support here. Bit of a wide area here, but I think that if we do go in and break, that's where we end up going. Here's 977. And let me go back here. Might have to tighten that up as we look into the 2 hour. If we hit these stops, so I apologize. It's going to be, we're looking at the daily. I think we would get down there, but I think before we get there, I'm thinking right here. You see, right there. And that's going to be 10.38. 10.38. My concern is if the dollar does hit that, and I think that the dollar can get to 94.02 overall, if we do break and we get a little bit of sustainability below 95, I think the first real pause is going to be around 94.48. So you could quickly see this market come undone, and just so that everybody's on the same page, I think that's before we start to see the bids come in. Just a little bit of shortcut, which would be 10.38. So let's go and move into the cash dollar index. And I'd like to take a look at the daily and where it is. One of the things I'm looking here with the daily, not trying to find a head and shoulders, I don't want to confuse anybody, but I was looking at some things myself. And we're looking at actually the daily here with the cash dollar index. One of the concerns I have here is that we've had, the Fed, continue to raise rates, and they continue to stay strong. Looks like they're going to keep on, or at least the perception is they'll keep on raising rates, 2 or 3 more times, potentially. Okay, and another thing we had good economic data, great NFPs, and we simply just could not get above 95.50. We couldn't do it. We kept trying to go back up there. We couldn't do it. We couldn't do it. And we're looking here on the daily, on the cash dollar index. We even had Fed chief come up there, Humphrey Hawkins. I'm thinking, okay, well, he's probably going to say there's some concerns here with this whole trade business that could affect us. He was like, you know what? Don't worry about it. You know what? It'll probably work out the best. It'll keep inflation low, whatever. So no matter what the news, it ended up kept coming out bullish for the dollar, we simply couldn't take. We'd get above here, we'd start to push above, and we turn around and give it right back. Great NFP, give it back. Okay, it's gonna be weaker. The Fed keeps on raising. We give it up, we give it back. Okay, last hurrah was Fed chief comes out and says, you know what? No problems. No worries about the issues with trade. It'll probably even work out better for us. We pop up and we quickly give it back. The only time we were able to finally break above was this whole business with the Turkish lira, and really was the exposure or potential exposure for Eurozone banks, which added. So to my thinking is that the dollar index ended up rallying almost on default. It had no choice but to rally because you know that the euro comprises 56% of the cash dollar index. So the scare was, hey, these Eurozone banks are, especially Italian banks, are susceptible to what's going to happen in Turkey. So we ended up pushing up higher. I'll give it that it pushed higher, but it was at a time and also in August that it had no choice, like I said, by default to push higher. My concern is now we're getting more rattling about China. They're going to do maybe another $200 billion. Trump says he's not happy about the deal with the autos with Europe. So we're getting those reasons again to push higher, and we're just not simply. We're starting to lose its effectiveness. At least to me, it appears that way. So my thinking is, and we had the resistance here at the 95.71 on this last run up. Thinking is that we're susceptible to a pullback. Whether that happens or not, and when I look here on the technicals, although it's higher, it's not adding on. It doesn't seem like it's going to turn around and completely come apart, but it does look like it's tired and it could slip. And so we'll see how things play out over the next week or couple of weeks, but it certainly looks like it's acting a bit fatigued. Now we're going to move into the 2 hour so we get a little bit closer look here on the technicals. And you can see this playing out. We're certainly moved higher, but we're kind of languishing here. Could we blast up higher? Yeah, potentially we could. But my thinking is, what's the catalyst to get us to blast up higher? That's my concern. I think that the one catalyst that could be to push us lower is if the perception would be is that the U.S. is going to be impacted by all this negative headlines with trade. Whether that's going to happen, we'll see. We'll see whether or not that comes to fruition. But looking at this technically speaking, it looks like it needs a break. And that break, I think, would point towards this 94, right down here. And it could quickly start to go on and slide, and we can get down there at 94, potentially actually down here at 93.72. So when I look at here on the dollar, and we're looking at resistance, we'll keep the resistance the same. And I think we had that from yesterday, which is right here. 95.57. We'll let this market prove itself. We actually had it at 95.58, that's fine. And we had support at 95.05. That actually held initially. Eventually in Asia, we got past that, but initially that held. Look, right in here, and we broke. Support, if we do start to slide back in here, it's going to be right down here, 94. $94.68. think we have to give it some room, and if we do get a little bit of sustainability, I think we're going to trigger some stops on this thing. So. Well, let's go to move into gold. And I do think that gold on this last move down, and we did run out of gas at 12.19 with some people I talked to. This was, what, a week and a half ago. And we were looking for a point here to go and stop. One of the things we were looking at was the market profile. And it was showing pretty good area right there at that 12.19. I think we poked our head above 12.20. And then we quickly started moving. Actually, we quickly broke down that day. But on this breakdown here, gold held up fairly well in the sense that I thought with the moves that we saw in the dollar, potentially we could have got down to 11.91, 11.80s. And we actually started diverging, or actually holding its own. Started holding its own before finally we started to even break higher. And we know the gold has been very, very oversold. Matter of fact, on this run up here, I liked that 12.19, but when I was doing some analysis for some folks on the previous webinar, we said we liked the 12.19, but there was a possibility that this market could have stretched all the way up to 12.28. So we really did see this market rotate lower, but there is that possibility here for the for some decent short coverage. And I'll tell you what, if we're of the ilk that the dollar does break down, I tell you what, be careful on this gold. Do not get in the way of it. I'd be very, very careful on this. I think people are going to be buying this on the way down. And it seems like if we do start to get a correction, not calling for correction, but if we do get a correction, we know historically, just the same way that historically in stocks, August is generally a good month, historically. Well, we know that historically in stocks, more often than not, people look at October, remember the Black Tuesday, or however you want to call it, and the whole October. Generally, we see a lot of those moves matriculate in September. Sometimes, I think it was about 2 or 3 years ago, we actually saw the moves coming in September, and finally the market kind of like corrected itself. By the time we got into the first week of October, the market was actually starting to correct back to the upside. But so if we're going to see some susceptibility, certainly people would then start to look at gold as a cheap alternative, cheap place to go and park your funds, concerned it's been very oversold. So I would not be getting in the way of this market. Be very, very careful, especially if, which I think that the dollar can break down. We'll find out whether or not it does. But I tell you what, if the dollar does break down, I think you're going to see this gold quickly try and pop itself up. So that being said, here on the gold market, what are we looking at for resistance? Well, we did come into this 1040, and we'll take a look at this quickly. When we look over here on the market profile, you can see right here, the point of control and buying point of control on this key area here came in right there at 12.1040. Doesn't mean you can't push above it, which we did, but it makes a natural pause for gold and opens the door probably for us to potentially come back down to about this 12.05. I don't think it's necessarily going to come all the way back down there, but this provides a good target for anybody who's willing to probably maybe take off a little bit. Now, whether gold can push high, we'll find out. But at this point, like I said, it gives an opportunity for this market to go in and from that key area, that 12.1040. Currently, right now, we're at 12.1070. Here's that 12.1040 again here. So it represented not only on the charts from a level, but also on the market profile. So we've had a pretty good run up here. If you look at it here, basically from the 12.02, 12.03, go up about, rallied up about $10. So support, short-term base would come in about 12.0670. So open the door, market's open to maybe work a little bit lower. So when we look at support coming in for the gold, We've got 505.50. We'll call 1206. Go with 1206. Obviously, the market's starting to turn around. So really, any pullbacks, people are going to be trying to go in and buy on these dips. So we may not make it all the way back down to 1206 as things are starting to turn around. My thinking, once again, is be careful. Don't get in the way of this gold if the dollar does end up breaking down. But we're going to have the support at 1206. Resistance, well, we did make a pretty good run up here. There's 1210.40. Resistance, at least for right now, and it's going to work as a trigger. It's going to be right there, 1213. But keep a very careful eye on the cash dollar index. If we start to slide here in the cash dollar index, I think this goes to turn around and run up like nobody's business. And if we do, that's going to be the first target here, is the 1219. For right now, resistance is going to be the 1213. Probably about ready to go and turn this to a range, but it hasn't earned that yet. But it's about ready to change to a range. Maybe may change it to a range by tomorrow. Let's make it earn that. We don't want, certainly don't want gold to turn and come apart, but we'll see what the dollar index does. But keep an eye. That dollar index is just hanging around. To me, the way I see it is it's almost like it's just one headline away from a pretty good move here. Obviously, if it comes in favorable for the dollar and we're just hanging around these lows, we'll probably see a little bit of pressure in gold, but I think they'll be picking it up on the dip. But like I said, the dollar, keep a very, very close eye, because if the dollar does slip from here, don't get in the way of gold. Let's go on and move now into the bonds. We are starting to continue to stay a little bit lower. Now I have the September bonds on right now. We're going to be rolling into the December bonds, but I wanted to go and keep that here just for some perspective. I thought if I switched over to the December, it might throw some people off. So we talked about 4407 being a pivot. Obviously, we'll continue to work a little bit lower, a little bit higher rates, supportive for the dollar. So when we go and push this out, where can we go to? For right now, support on a very short-term basis is going to be right there, 43.19. On the upside, well, we got the pivot here, and they'd have to get above that pivot, but we're able to go and lower this resistance, and that's going to come in right here at 44.15. Now, that's on the September bonds. We're going to be rolling into the December's later on today, as far as I'm talking about, as far as on the bias chart. But I thought it was important just to give an indication where we stand as far as rates. Then we keep it on the September, and then we'll roll it into December tomorrow. We certainly already rolled over the bunds into the December contract. Speaking of bunds, and we've rolled into December, this is actually going to be the resistance right here. That's the level going back from the September's, which is 60.18. That's actually just capped it, just about capped it right there. So it's actually 60.18 on the December bunds for resistance. And as far as support, We're right there, 60.04. 60.04 for support here in the buttons. One of the things we talked about yesterday is we had our support yesterday at 59.98, and if they got past there, that would open the door for this euro to move higher. We certainly did get past there. I think we went into the 59 low to mid 59.80s, and that gave that euro the bounce where it continued to move higher at the time. Let's go on and take a look here with the SPOOs. Resistance is going to stay the same right here at 29.88. And I mean 28.98. You can see it right here. We had support here and then ended up holding it. We're actually going to move this lower here for an opening to make it down here to the 38%. And that's going to be 28.75. We'll call it 28.74. Well, actually, you see this high right there? That comes in at 28.73 and a quarter. So we'll call it 28.73. Now let's go move into the NAS. We're already finding a little bit of support here on the 50% here on the pullback here in the NAS, but support actually comes in here, 74.47. There is some support down here, but if we do break, and actually I think it would actually come in just a little bit lower. It's going to come in right there at 74.36. Right there, 74.36. Resistance right there. You see that coming across? 75.73 we call it right there. It's actually 75.73 and a quarter, we'll call it 75.73. And let's go and move into the DAX. This has continued to be weak. And I thought it would probably could have held up a little bit better here, but the woes continue. Obviously, we got some bad German data news. Yesterday it looked a little bit better. Today, the German data news and the headline was Trump tariffs take a bite into factory orders. Yeah, I guess it's the old glass is half full analogy. So you know, it's just going to stay lower, 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 lower. And as long as the news is bad, or the perception is that the news is bad, they're going to find every reason why this market would go lower. So, how much silver can we punch up in here? The real support if we get a break in the S&P, but it's been diverging anyway from the S&P. So, but if we do break, the support level comes in right there at 11,895. 11,895. That'll be support. And resistance here for the DAX. It's going to be right there, 12,156. 12,156. So leaves us with some free time today, and we'll go over the markets, or go over a real quick recap. Yeah. For those that want to go and copy this out. So today's big mover has been the gold market. It certainly looks like we're going to have the potential to go higher. We have been diverging a bit from the dollar. We actually started to see that come to fruition today. Now, once again, like I said, be careful with this gold. It has the potential to go much higher if we do get that dollar break. And that's what I'm looking at as far as the dollar going break. We run into a little bit of resistance here. This 1040 that comes into play with a market profile that comes into that exact same level. But like I said, this is almost like working like in a sense, almost like a pivot. We got above it. We're starting to pull back just a hair. We're holding, but I think this market is just watching that dollar. And I think that dollar is just one headline away from making a pretty big move, getting back here to the dollar. And the dollar just started to break a little bit lower. Right here now, and my whole thinking is with this dollar that we have the potential to go on and pair down here and make a move down to the 94. So be very, very careful here. I think to me the dollar has had every opportunity to go and be much higher, and despite all the headlines, when you look at China and everything else, we just simply have not been able to go on and capitalize. To move much higher. You would think that the dollar's had every benefit to go and move up higher. It simply has not been able to go and do it. And we're starting to work a little bit lower here on the dollar. Looking here at the euro, certainly this euro looks like it has a potential to go and move much higher here. on the euro, and the euro itself has held up relatively well. So we've had its own share of bad news, and we're not breaking down. So it's obviously almost like an inverse play that we're seeing here with the dollar index, which has had every opportunity to go much higher. The euro has sustained some pretty big hits here, and we're now starting to go in and move a little bit higher as the momentum starts to change a little bit. And I think this is one market that, once again, if we get past the 1673, watch out. We're probably going to try and make a push higher into here. But be very careful. Looking across here with the cable. This one is trickier here. We actually have our resistance very, very close here. Right there at that 29.58. We'll go and take a look. Actually 29.63, very, very close here with the cable. And I think it's a tough market to trade right now because it's so susceptible to the headlines. So be cautious here. I think it's a tough one to trade here. The only one that's tougher to trade than the cable at this point has got to be the dollar yen, which is kind of been an up and down movement here. But the key thing for the dollar yen has been this daily close for 11.36. We're below that right now, but for today, resistance low for the dollar yen. We're going to still keep it at that 12.11, but that bias pivot, the 11.66, has kept this market within tight range. The gold market, as I said before, has been positively diverging from the dollar. And I'd be careful not to get in the way, because once again, my thinking is the dollar is susceptible. So if that's the case, we could really make a run up here in this gold market, which has been, when you pull this back, you're thinking, okay, it's already rallied quite a bit off of those lows, but then you think how far it's been. This market's got a good long way to go. We don't even get to the 38% of 1167 of 1369 until we get to 1245. So you're talking another $34 higher just to get to the 38%. And we're sitting in a situation where the dollar could quickly start to go and pare back. So just be cautious with that. Over here with the dollar CAD, just once again a quick recap. This 3206 area here, and you'll see it in the zone that we have. Holding this market for right now, but obviously another headline-driven market here, susceptible to headlines, and that could end up working out Canada's way. But we'll see. Right now, we're certainly moving much higher. But we're getting a little bit of a fatigue here, so we'll take a headline to go and get this market driving. But right now, like I said, this week was going to be a bit of a tricky week as the market tries to figure out what it wants to do. Can the dollar go and make another move higher? We'll see. And I think the markets are sitting back trying to figure that out right now. And we've seen some back and forth especially with the Brexit headlines. And the bund continues to remain weak. We did see a pretty good fall in the bunds. Now we have rallied back up, but still rates are higher, and obviously that's impacting the DAX here, which continues to stay weak. Be wary on these bonds. The bonds are continuing to move a little bit higher. Rates are starting to move higher. Now, when I look over here with the S&Ps, these markets they're still in a very, very good bullish mode, but same thing here. Looking like it's getting a little bit fatigued. Same thing, I would be wary of some headlines that may come out. My thinking is if the perception may change where U.S. assets are going to be viewed negatively with this whole trade business. They've been holding up very well, but we are starting to see some cracks in the armor with Amazon. I don't follow stocks that closely, but certainly, like I said, I think it's susceptible, but we may not see this translate until next week. Dale should be coming on, so I'll let him go and take over. And thanks for joining us here on the Morning Edge webinar.